Joining us now, Tom Lee, Fundstrat Global Advisors, head of research and a CNBC contributor. Could be down, obviously, a lot more. Straits of Hormuz maybe in play at this point. In past incidents like this, and every single time it's happened, we've always said, well, in past incidents, it never lasts that long, and decisions that are made about whether staying in or getting out of a market, normally standing pat has been the right move.
That's right. I mean, nobody likes to see headlines and the images of explosions and war. And so we know risk premium jumps. That's why the VIX jumps. But it's not really going to change the fundamentals of the U.S. So in the past, markets kind of sell off into the buildup, and then they tend to do better once the battle begins. And I think this is going to be similar.
We got to watch across the board, obviously, gold and the yield curve, and oil, obviously, oil. It won't affect us in the economy at this point, but I guess there's a scenario where down the road it could, isn't there?
Yeah, I mean, I think a lot of experts are going to worry that this could, encompass a larger conflict, something that would be, World War III or something.
Right.
But in the absence of that, I think the worst of the sell-off is going to happen this week. And, I would expect actually March to be an up month for the stock market.
What about the price of oil, which has been such a huge benefit, lower prices of oil to the economy, to the consumer? I realize that we are self-sufficient, but a lot of other countries aren't. If you look at China, if you look at India, Japan, is there a point that it gets more expensive, and if it gets more expensive for China, that is then exported to the rest of the world?
Yeah, I mean, oil's going to create a price shock because oil, it ends up so much in the economic supply chain.
And even what we produce here is going for 72 now, so it doesn't matter whether, we got plenty of it, but oil companies are obviously going to reap some benefits, but consumers, this will filter through in a time when we're still inflation phobic, I think.
That's right. In the past, oil shocks are actually more at risk of maybe tipping a weak economy into recession.
And that's not where we are.
Yeah, and so I think instead of thinking the Fed would be hawkish, I think the Fed might be dovish on a spike in oil.
This market is not doing things that you didn't think it might do at the beginning of the year. And it had nothing to do with what the developments of the past week. Block. That makes people think AI is, maybe we're underestimating, unless this is the same guy that had 3 times as many at Dorsey, 3 times as many employees at Twitter as was necessary to run that outfit. So I don't know whether you paint a broad stroke about AI with what happened there, or whether this is a one-off. I tend to think we better get used to this, no?
Yeah. I mean, I know many companies that are rolling out AI workers. Even at Fundstrat, we are deploying these agents and, treating them as if they're employees. But I think we're still unsure whether or not this will ultimately create more jobs or not.
And AI is will kill a lot of companies. And AI itself, the killer is, you could say, had such a run that it is at least richly valued.
Yeah. And, at least in the case of the software stocks broadly, the entire complex kind of has fallen back to where they were last April. To me, that's clearly an overreaction. So I think it makes sense that you'd start to see some of the groups that got hit hard mean revert, including the Mag 7.
So I think someone else made that point, that maybe the leaders in building out AI, maybe they stay where they are and stabilize, but maybe you get a rebound from some of the oversold things.
Yeah.
So you think we're getting to the point now where the initial weakness you saw in the markets, we're making a bottom at some point? What do you say will be up for March?
Yeah, I think March is going to likely be an up month. I know it doesn't feel like that because of the way the end of February felt. But
comes in like a bear, goes out like a bull?
Yeah. Yeah, it probably comes in with the better weather. But, the things like software, the Mag 7, and the crypto all had early weakness. They're all probably in the final stages or have already bottomed. And I think that helps lead us up to an up April.
Have you woken up in the middle of the night and looked at where Ethereum is and said, I can't go back to sleep?
No.
You're not worried yet?
No, because, Ethereum, there's the fundamentals, like what's happening. So much is being built on Ethereum now. I mean, almost every major announcement of a tokenized fund is being built on Ethereum.
Does that translate to supply and demand dynamics that make the price go up, though? Or can you just keep building out all these networks at 1,900?
I mean, that would be like someone saying all this activity is happening in the United States, but the economy shouldn't boom, Yeah. So if it's all taking place on Ethereum, then price follows. But we are in a crypto winter, so price doesn't matter. Capital is looking at gold and silver and ways of, hard assets. But that isn't always going to be the case.
I'd read you're buying more Ethereum on the dip. How much more, and does that continue today?
Yes. So Bitmain's been buying about $50,000 or about $100 million of Ethereum every week, but the cash balance has grown to over $800 million. So it's able to, at the right moment, make a major buy of Ethereum. So I think we're getting ready for the crypto bottom.
Very
but
good.
we're still buying about $100 million a week.
All right.